Hey, Vivalife, this is Dr. Kelly OMD. We are back for a wonderful evening, our Ask Dr. Kelly OMD, which is 7:30 on Monday nights. We have a very special guest who I've known for the last 10 years, so I trust implicitly. His name is Glen Wright. He is my financial advisor, and the reason why I am where I am today financially is in most part because of him. Glen, let us know a little bit about yourself, and let's get started.
Well, good evening, ladies. It's great to share time with you. I'm someone who just really cares about making a difference. I got into this industry just to help and to serve. I'm the CEO of Wealth Advisors. Started the company over 20 years ago, and I'll talk a little bit more in a few minutes about it. But that's really been the goal, to make it. I'm a nerd at the end of the day, so questions are good. I read all the time, so I can answer questions. So I'm excited to be here. Thank you. Pull this up. Hopefully everybody can see my screen.
Yes.
Okay. So I'm going to get right into it because I can be a little long-winded, and Dr. Elmore told me I only have a few minutes, so I'm going to go through this pretty quickly. But again, any questions you have, I want to save time for that. So as I mentioned, I'm a nerd. I've got a bunch of designations and degrees, but the two that are probably the most popular, I'm a certified financial planner and a credit investment fiduciary. I've been doing this over 25, almost 30 years. I've been doing it most of my life. I started very early. I've had over 3,000 interviews, 3,500 interviews with different people. And I've learned things from them as well on what works, what's good, and what's not good. And so I'm going to share some of those with you today. And we have offices in Charlotte, Detroit, and Nashville, but Charlotte is home for me. And when you think about a wealth manager or financial planner, they're really two different things. So most financial planners are investment bankers or investment analysts. And so they'll take your money and just invest it. Whatever you have, that's what they focus on. But the truth is, it really takes holistic planning in order for you to be successful. That means cash flow management, investment management, risk management. It's not fun to talk about insurance, but insurance is one of the, especially life insurance, one of the biggest tax loopholes in the code. Tax planning, which I'm going to talk about today, and estate planning, and of course, retirement planning. All of those things go together. And you'll see in the chart, you're in the middle. We work with bankers, insurance companies, attorneys, of course, your investments and accounting to make sure that your plan, your dreams, your hopes, the things you want to accomplish actually become a reality. So I'm going to start with the budget. I don't care who you are. Bill Gates has a budget. Guess what? You need to have a budget too. And you want to look at your expenses. So you have fixed expenses, the things I have to pay the same amount every month. And then the variable expenses, those are things that change, like paying off your credit card at the end of the month. And that takes some self-control, right? And then you also have irregular expenses. These are the things that come up in life that are unplanned, like the hot water tank going out or the HVAC unit going out. Those things happen. We got to make sure that we're planning and prepared for that so it doesn't interrupt your plan. Okay? One of the first things I always say is pay yourself first. And a minimum of 10%, but you really want to do more than that if you possibly can. The people who I found who are the most successful are able to save 30, 40, 50% of their income. And then you have your paycheck, and then you pay yourself first. Now you don't go buy something, you don't go buy a car or, go to Neiman Marcus first. You want to save your money first. And then you have those expenses. Once you save, you have no problems with me. I think the biggest value that I can add, I try to, is accountability. Making sure that you're doing what you're supposed to do in order to reach your dreams and your goals, and make sure that you're updating them on a regular basis. When the facts change, the plan changes around you. Okay, and then once your expenses are paid, then you have your fun money on whatever's left over. But as long as you saved, now you're prepared. I want to talk about investing very quickly. Buy low, sell high. That's what we do. That's the goal. But what's low and what's high? And the reason why I added this slide is because what recently happened. Last year, the S&P 500 was down 18.11%. It was down. It was ugly. Okay. And emotionally, we can say, you know what? I need to take my money out. You know, I had $100,000. Now I have 80,000. That's not a good feeling. But in fact, you should actually look to start buying, because now stocks are on sale, investments are on sale. That's when you actually put more money in. So getting out of that emotion, and the other emotion of greed. You've owned some stocks forever. They don't go up all the time forever. At some point they go down. We all remember Blockbuster Video. They were around, they were the staple of many communities. However, you can't find them now. So it's good to know when to get out. So buy low, sell high. And when you're looking at investing, you have fundamentals, things we look for. And here's where I'll say to start. Look at companies you actually do business with. If you're on this webinar right now using a Mac, maybe you might want to look at Apple. If you have the iPhone, or if you have a Pixel and you have Google and use Google all the time, maybe you want to look at Alphabet. Look at those companies that you actually do business with. There's probably a reason why. And looking at earnings per share, looking at the revenue, the dividends, these are things that we typically look at. You buy good companies with great balance sheets and good leadership. They may go down temporarily, but they're going to come back. I don't know if anyone knows this, but AI is real. It's happening, and we need to embrace it. And in your investing, if you believe that's the case, why not look at some of the companies that are heavily investing in AI? We know that's the future. It's a no-brainer. Do you know that AI has already taken 5% of all jobs in the United States? 4,000 jobs in May alone. So this is happening. We need to embrace it. These are the things that we look at to make sure that you're prepared. This may be second to your budget, because your savings rate is the most important rate. I don't care what your rate of return is. If you're not saving enough, you're not going to accomplish your goals. But second to that will be taxes, which can help your savings rate. Do you know taxpayers miss out on billions of dollars, billions, consistently, because they're not taking advantage of what's out here. I am a tax strategist. I own a CPA firm. This is one of the keys to make sure that not only, you guys are successful, you're making money, you want to make sure you keep it. So this is very important. Let me break it down. So you get your 1040 tax return. I'm not going to get too far in the weeds, so don't go to sleep on me. But look at you have your W-2 income. And then you have capital gains or losses, making sure you can, hopefully whoever you're working with is doing what's called tax harvesting, where you can minimize your capital gains. Even if you're making a bunch of money, you want to minimize that on the tax return. Why? You want to defer the tax so you can make more money with your money. This is the key. Our tax code is really made for business owners. And so even if you're a W-2 employee, think about something that you can start a business if you don't have one. And there are a lot of expenses you can take, and you can save a ton of money by setting that up, having LLC, having some type of pass-through entity. And then also making sure you're taking all the appropriate deductions on the personal side. Typically, 99% of all CPAs are tax preparers. You give them the information, they put it into their software, and here you go. But are you getting real advice here on, think about this, think about that? What about charitable planning? What about, there's so many things. The tax code is so large and it's made full of loopholes for you to take advantage of. So this is the key. Everyone here is successful. You want to make sure that you're taking advantage of your tax return. Quick case study. Got Jenny, 50 years old, business owner, in the top tax bracket. Got a portfolio with an expense ratio of 1.75. Many people don't even know what the expense ratios are. It's in your prospectus. If you have a TSP, if you have a retirement plan, 401k, then they send you the prospectus that most people don't read, and it's made to be intimidating. All the fees are included there. Okay. Credit card debt. Credit card debt is never great, especially right now. But even at a rate of, Jenny has credit card rate of 20%. Term life insurance, well, the cost of insurance is important. Life insurance is, again, I didn't talk anything about permanent life insurance. I didn't put anything in here about having that. It's a huge tax loophole, but even with term, you want to make sure you look at the cost. And then let me move this over. Tax deductions. Again, this person, Jenny, these itemized expenses, no retirement, very little done. There we go. So what have you cut down the expenses to 15 basis points? And that's about the average of our portfolios, 15 basis points. The expenses go down pretty dramatically. Credit card debt. What if now that 75,000 is at 5% interest because of the right balance transfers, or there are many different things, lines of credit that you can set up and actually get deductions on those. Having the right type of insurance where the cost is even less, even for this term policy. Every dollar matters. Every dollar matters. And then tax deductions through, again, this itemized expenses going up dramatically, having a specialized retirement plan, another deduction. So looking at all those, those few things alone, I didn't get into rate of return. I'm just talking about saving money by having a holistic plan. Jenny saved $52,000. Now, in addition, Jenny was made really to be held accountable to cut these non-essential expenses down by $7,500 a year. Well, it doesn't sound like a lot of money. What does that mean? What if you reinvest that on an annual basis? By just tweaking what you have, maximizing what you have. There's a few things, taxes, expenses, etc., through your investments you already own. Then now, through the savings alone, in 10 years, it turns into $883,000. So what if you have 10 times that amount? Now you're saving and making millions based off just tweaking what you have, taking advantage of the code, those things alone, and making sure that everything in your life, whether it's your auto insurance, homeowners insurance, do you have most people just pay and hey, I'm not even thinking about it, especially if you escrow in a mortgage, but do you have the best insurance, the most cost effective? Those are the things you want to look for. And then we can save those dollars add up, and over time, it turns into a real number. The secret of getting ahead is really getting started. I've talked to many people that say, man, I wish I would have met you 10 years ago, 20 years ago. But I just, I feel like I could do it on my own. I never wanted to talk to someone about money. If you know you aren't doing the right things, it's good to talk to someone, especially if that's all they do. And this is all I do. If it's plumbing or fixing the roof or something, I'm not the guy. You don't want me doing it. But this is my unique ability in making sure you have someone that's aligned with you to help you to achieve your goals. And so this is what I mean by being aligned. What do you look for? You want someone, again, who's knowledgeable, like having the CFP and wealth management designation, and a fiduciary. I'm an AIF, but we're a fiduciary firm. And I'm going to talk about that in a second. We're independent. So when you go to State Farm, nothing wrong with them, but they're going to give you State Farm. You go to Allstate, they're going to give you Allstate. You go to Northwestern Mutual, they're going to get that, John Hancock, etc. But you want to get the best of the best in every category, in every area of your life. And having someone that's independent can help you to do that. And then fee-only investing. So we don't get paid. You can follow the money. We don't get paid from anybody else but our clients. And you actually see what we get paid. We're very transparent. There's nothing in some prospectus that you have that you can't understand and you can't talk to anybody about it. That's not the case with us. And so you just follow the money. And so normally I tell people, most firms are broker-dealer firms. The broker-dealer tells the registered rep what they can sell and who they can sell it to. And they may get paid by transaction fees and or commissions. So let's say that you have, you walk into one of these broker-dealer firms, and this is 89% of the industry. So all the names you probably can think of are those firms. And they have two options. You walk in with $1 million. They have two options that they can present to you. One may pay them 6% in commission and fees. The other one may pay them 5% in commission and fees. Which one are they going to sell to you? And so probably the one that pays them the most. But what if the other one is better for you? That's a conflict of interest. So you can't work with someone, or you should not work with someone that has a conflict of interest. They could be the nicest people in the world. I'm a nice guy. Doesn't matter. They need to be aligned with you. And so for us, for instance, you take those same assets. We don't get paid from anywhere. We could change your account every day and make trades every day. It doesn't cost you a dime. At $1 million, we would get paid 1%, for an example. And so think about this. If I help you through all those ways we just mentioned, those are just a few, to go from 1 million to 2 million, you will probably be very happy, right? Because your money just doubled. Well, guess who else is going to be happy? Us, because our money just doubled as well. The only way we can do better is if we help you do better. So we don't sit across the table from you. We're sitting on the same side as you. So those are the things. Knowledge. They need to be knowledgeable. They need to be qualified. They need to be a fiduciary. And only 11% of firms are the true fiduciaries. Many say it, but very few are. That you have to be what's called a registered investment advisory firm, RIA, independent, and then again, fee-only investing. So I went through this very quickly, as promised. It was hard for me, but I think we got through it. If anyone wants to reach me, this would be our firm. We have our website here, worthadvisors.com. You can email us at info@worthadvisors.com, and either myself or one of our financial planners will be in touch. And then also, here's our phone number, 704-731-0121.
Awesome.
Okay.
Thank you so much, Glenn. That was packed, because I think that was like my whole 10-year experience with you in 7 minutes. So thank you so much for that. Okay, first question coming up, and this is from me. How do you garner trust for your clients? Because I think in our community specifically, there's a lot of trust issues when it comes to money. Either we think we know what we're doing, or we had a bad experience with someone and now we're like, I can't trust anybody with our money. I'm going to put it under my bed or just put it in my savings account.
Yeah, well, that's a great question. Again, for me, and it's been a challenge even with people who want to come in and work with us and work for us. People will see a level of success and say, hey, I want to do that. I want to make money. You can't do it for the money. I think just for anything, you have to be passionate about it. You know, as I mentioned, as you know, I got into this for my mother. I grew up in a household where there was no financial literacy. We actually lost our home. We were homeless for a while. And then my mother got back on her feet. I lived with my grandparents, and they didn't know anything about money. And so I started reading everything I could to help her. And from there, working at the banks and other firms before starting my own, I realized that there were other people who were just like her. So the first thing is I need to know what I'm talking about. So I'm a nerd. I read all the time so I can give good, sound information. And so I need to know what I'm talking about, and not just sound like it, but actually implement it. And I need to be implementing that in my own life as well. which I do. And so now I can share real experiences. It's not theory. Here's what I know works. Here are the things that can actually be successful. And you share that, and then you work together. And it takes touch. I've heard many times where people call and they don't get calls back at, people who manage their money and so forth. They need to know that you're there, and we're there. We're here. We touch sometimes too many times. But especially, you want to make sure all the questions are answered. We want to be a resource of anything financial. So if you have questions about auto insurance or property and casualty, we don't offer that service, but we'll help with that. Estate planning, we don't offer that, but I look at estate plans all the time. So those are the things. And then also having a network of other trusted advisors out there that can be referred to you wherever you are, anywhere in the country or in the world, even go on. And in order to make sure that if you have a financial concern or a question, it's going to be answered or solved.
Wonderful question. Amazing answer. Excellent webinar. Now, y'all know how I do. The Francis survey way. If it was good, thumbs up. If it was all right, thumbs to the side. And if it was not so great, then thumbs down. So, Glenn, I'm giving you a thumbs up. We'll see how everybody.
Thank you. I hope everybody does. I do cry, so hopefully everybody will enjoy it.
Leave us with your information one more time so that we can make sure if they want to get in contact with you, they take the opportunity.
Yeah, we pull it back up one more time.
Awesome.
Again, it's worthadvisors.com. You can email us at info@worthadvisors.com. Somebody will call you back quickly. And then you also have our phone number, 704-731-0121.
Absolutely. All right. Thank you so much for being here. I'm going to move y'all to the waiting room and you guys can exit. Glenn and I are going to do our post wrap up. But I do want to say thank you so much for being a part of this. I'm Dr. Kelly OMD, drkellyomd.com. If you want to be a part of the Vivalife SPF Me experience, go ahead to that link on that link tree and choose an experience. There's different levels for everybody, but we're here to make sure you live your healthiest and wealthiest life. Have a good evening. Vivalife. All right. Thank you for being a part of the Vivalife experience. I'm Dr. Kelly OMD, board certified OBGYN and healthcare executive. If you like what you heard, then please go ahead and like, share, and subscribe. The reason why is because we are trying to educate, encourage, and inspire 1 million people to live their healthiest and wealthiest life. And this is what we're bringing you. We're bringing you educational videos. We're bringing you podcasts. We are bringing you webinars with subject matter experts, including myself, about the topics that affect you the most. So go ahead, like, subscribe, and share. We are everywhere. Have a wonderful day. Vivalife.